with that perspective. Thanks indeed. 45 points on the Nifty is what we have at 18,062. We have now Ravi Dharamshi joining in, Chief Investment Officer at ValueQuest Invst Advisors. Ravi, good afternoon. Great to have you with us here. Thanks very much for your time. I just want to start by asking you your view on the markets, Ravi, because many are taking a bit of a skeptical view on things. Earnings have not been all that great. There have been more downgrades than upgrades. And even when you talk to companies and ask them how, Q4 so far has panned out, in many cases, it's not a very comforting kind of picture. So let's just get your sense on how you are seeing the underlying environment with regards to stocks and what the near-term view is.
Everything has been thrown at this market, from interest rate hike spread almost to the extent of 3-4%. We have been through inflation, we've been through war, we've been through crude spike, and despite all that, we are within 3% of a new high on the indices. And even if, for that matter, the overall market also probably be down max 10%. Barring some of the tech stocks which are down 50-60%, some of the new IPOs, new age businesses, I think we have done well to survive this turbulent period without much capital. So from that point of view, market is telling us that India is standing its own, no doubt about it in the world. So the period of wealth creation will probably begin again once all these things are behind. In my opinion, I think the worst of inflation is behind us. That doesn't mean that interest rates have to come down, but even a incremental positive. Even from India's point of view, I think the recent print on the inflation is not going to change the stance too much. In fact, RBI maintained that they are going to maintain their stance, which was biased towards tightening. So having said all this, with that kind of a backdrop, I will take markets where they are any day. Will they start performing from here? I think that depends on some emergence of some positive factors. As you rightly mentioned, the quarterly results, there was some concern. I think most of the concerns are surrounding around the margins. I think the margins for most companies are taking a hit because of the raw material prices increase, because of interest cost increase. Overall, there is a slight dampener. But having said that, I think the lead indicators are suggesting that the margin pressures are actually easing. So I would wait for a positive trigger, but
I think we'll just, we'll fix your audio and then we'll just come back to you. I think we're having a bit of a technical glitch as we speak, but we're almost down to around that 3 p.m. move on. And the Nifty has come off close to around 80 points from the high point of the day, though there are select stocks that are moving around, and they're moving around quite a bit. Case in point being some of these defense stocks have built onto those gains, so they moved to the high point of the day. A couple of metal names as well. They were a little bit lukewarm earlier today, but JSPL has moved higher. So pull up the intraday chart out there. That stock has spiked up a little bit. Granules has moved to the high point of the day as well. And Divi's Laboratory, whose numbers were quite disappointing, or very disappointing, so to call it, and the visibility as well is not that great. Divi's Laboratory as well has seen a bit of an uptick. So plenty of stocks moving around, though the headline index is sitting pat with a gain of close to around 50 points odd. On the flip side, a couple of stocks as well that were losing out. HDFC, that's putting pressure on the index. The Nifty is unable to move up is because HDFC has now moved into the red as we speak. Intraday chart comes up for you. Ravi, you're making a point. Go ahead. We can hear you now.
No, I was saying that market has gone through a lot and we are still where we are. I think market is waiting a positive trigger and we should start performing. There is some sort of a fatigue that has set in because of the non-performance of the market for almost 15-16 month period. So people have forgotten that India is actually doing quite well in the OSS. It's an OSS in the world, where world has actually fallen off the cliff. So, I remain quite optimistic. Things should start shaping up well from here.
Ravi, hi, good afternoon. I just want to get your thoughts on industrials and capital goods, since that is a space that you're quite optimistic on. I think you're overweight here. So how are you playing it? What part of the capex cycle are we in right now? What would be the best bet? Do you go for a diversified conglomerate like L&T? Should you be looking at very specific companies like, I don't know, maybe a Thermax or a Cummins? How should one be approaching this part?
Yeah, good afternoon, Surbi. without naming any company. So let me just say, sir, we are still at the cusp of the capex cycle. Most of the burden is being carried by the central government. Even in this budget, I think we have witnessed a 30% plus kind of a jump in the capex budget. So that tells you that the investment cycle, and we have, in absolute terms also, we have gone from about 3 lakh crore kind of an investment to a 10 lakh crore. So that is a huge jump, and that will have a multiplier effect in the economy. So I am very bullish on the capex theme, and I think private capex is also beginning to pick up, and soon enough state capex. So the theme has a long way to run. Unfortunately, most of the companies that you mentioned, from a near-term earnings perspective, will look like they are very overvalued. But I would say one has to look beyond the cycle. You have to look at, are these at the peak capacity utilization? Are they at peak margins? And are those peak profits getting multiples or no? At this juncture, I feel the multiples might look high, but the profits are not high. So at some point of time, through time correction or maybe price correction also, whenever an entry point is presented, these very stocks in this capex theme will do very well. Overall, I think within capex, we are most bullish on manufacturing sector, so to say. So manufacturing and energy transition are two big themes that are going to pan out. And within manufacturing, I would say defense and railways are two where government's focus is extreme. We still don't know how to, make the companies, because there are not too many listed companies where you can create that kind of wealth in these sectors. But definitely, this is a sector where we are witnessing tremendous amount of money going in, investment going in, and a lot of wealth will be created over here.
Ravi, on the day of the budget, everyone was very excited to hear in the new tax regime, the tax rates have been cut and that will boost consumption. But since then, not too many people have come out and called it out as a big trigger. Do you see consumption really seeing a leg up in the, currently, or do you see it happening in the next couple of months? Your thoughts on consumption in India?
So I agree that the tax cut per se is not the reason why one should be bullish on consumption theme in India. Having said that, I think no doubt about it, India is the last standing consumer in the world. I feel the developed market consumer, developed economies consumer has tapped out. Chinese consumer is the way up, but at the same time, there is, most of the companies over there are facing an issue with regulatory challenges. So I would say India is the last standing consumer, and the theme has a long way to go. From near-term perspective, I think there are some challenges, whether it's in the rural market or in the urban market, because the inflation is starting to hurt. So that will lead to some kind of multiple compression, provide a good enough entry point. Now, in consumption, we usually tend to equate it with FMCG, but we are bullish on more retail stocks, whether it is QSR or apparel and footwear.
Okay, all right. Hi, Ravi. Good afternoon. Ravi, one sector that's been underperforming has been pharma. And you have a couple of big disappointments in the past earnings, whether it's Divi's, Loris, Piramal Pharma, some of them were howlers. But a couple of those quasi-pharma players, like say an Ami Organics, I think you'll have that as part of the portfolio. That one has been looking at, but has prospects as well going ahead. What's your view on pharma or some of these pharma quasi-plays that you could indirectly play the theme?
So you're absolutely right. Pharma has had double whammy. And one, the raw material went up because of China, and then the finished products prices went down, have been going down in US, thanks to the shifting of pricing power in the hands of a few buyers rather than the suppliers from India. So, and it has been derating since now almost 5 years now. Barring the COVID spike, pharma has actually been on a downward spiral. So I think that now even the extra numbers that had come up last year because of COVID are also out of the system. So I think maybe it will last a quarter. But now I think the valuations are becoming really, really reasonable in pharma. It should be treated as a manufacturing company and not like an R&D company. And I think if you look at it that way, and then I think sooner or later the stories will start, the valuations will start making sense, and investment opportunities will emerge over here. Regarding the investment that we have made, our call is not so much on the pharma space. It is more that eventually a lot of the chemical production also needs to move to India. I think, in fact, chemical was the first place where the China Plus One strategy got implemented before everyone knew about China Plus One, thanks to the pollution problems. So we constantly keep looking for good entrepreneurs, good businesses which can scale up. I think the company that you mentioned is one such company, but again, disclaimer that we are looking with a 3 to 5 year lens. It might not perform for the near term at all.
All right, no, but that's good to get a few ideas. You know, the audio is coming and going. I had a few other questions, but I guess we'll keep it for another time. Thank you very much, Ravi, for joining us here on CNBC TV18. It's always a pleasure speaking with you. Thanks indeed. Okay, well, let's move on.